We're ready.
We're ready to talk about
Buyers. Tips.
buyers in Utah, and tips.
Tips for buyers. Okay, I actually do have questions already.
Yeah,
I'll ask you them and we can just discuss them as we go. Um we did talk about this on the other one, which is really funny, and so I kind of want to talk about it again just cuz um it's kind of easy to talk about for one, and two, it's kind of dramatic, and so people when they see it, they'll
yeah,
talk about.
yeah.
So when people go to buy homes,
Hmm?
I want to talk about accidentally or on purpose opening a new line of credit before their deal is done.
Ooh, yeah, that's a big one. That's a big no-no.
Exactly.
Don't do that.
And and some of them, some of them are like, oh, people go out and buy a new car and destroy their credit and
Mhm.
then up their debt to income ratio, and then straight up cannot buy their house, and
Mhm.
then which is kind of more like you know a negative way to do things. And then there's also things that are like, maybe I wanted to pay off my debt
Mhm.
before I get my home, which in their eyes people would be like, that's a positive thing,
Right.
but then they don't realize that it causes issues.
Well, I mean, I think like in that scenario, like for any time you're buying a home,
Hmm.
you're almost treating like your bank account, your credit score, like on frozen. Does that make sense? You just
Yes.
want it to be frozen. Like, yeah, of course, go buy groceries,
Yeah.
basic living needs, pay your bills, all that good stuff, but don't go splurge on a new car. Like what?
Yeah, for
That's
sure.
crazy, or don't even pay your debt down. Just treat it like, hey, between this transaction, between now and the end of the transaction, my credit is just going to stay the same.
Yeah.
I'm not going to do anything positive or negative. I just want it to stay here till
Yep.
the end of the transaction, till you have the keys in your hand, till you have
Hmm.
possession of the home.
For sure. And yeah, and like I was saying, it definitely doesn't have to be
Mhm.
negative and whatnot. And it's just like you're saying, try and keep it, just don't do anything. And if you have questions,
Mhm.
definitely talk to your realtor. That is a great time, or your lender. Well, lender would probably be better in these situations. But yeah, basically when you're going through the home buying process, you don't want to change anything about your finances. Obviously don't change
Mhm.
jobs. That's a huge one. So I
Absolutely.
guess some people might not know that, but it definitely don't want to switch jobs right before,
Mhm.
and definitely don't want to open any new lines of credit.
Mhm.
And no, don't get any new loans on anything. Don't open, and some people don't realize too, credit cards, or like accidentally getting a loan on like appliances,
Mhm.
stuff like that. Cause like you might be moving into a new home and then being like, oh, I want to get new furniture, and they
Mhm.
go to IKEA or whatever, and
Yeah.
they open a line of credit that they didn't really necessarily think about,
Mhm.
just because they're in their eyes, they're like, oh, I'm buying this new house, I want
Mhm.
to buy new furniture, and they get excited, and then all of a sudden it ruins their credit. Or
Mhm.
even if it changes a little bit, if you're a first time home buyer, it doesn't take a lot to kill a deal in terms of opening a new line of credit. So
And I think that's the main thing, like you said. You just don't want to kill the deal,
yeah,
right?
for
You don't
sure.
want to kill it. You don't want to rock the boat
Hmm.
positively or negatively, up or down. You just want to stay even keel
Yeah.
until you get to your destination, which is
Hmm.
the new home, which is so important. And like you said earlier, talk to your lender and your realtor both at the same time. Like, ask them questions. It's totally okay if you ask your lender or realtor, hey, can I go buy this thing? Well, we're going to tell you no immediately, but
Hmm. Yeah.
like, go talk to them and ask them. Don't
Yeah.
be afraid to have that conversation, especially there's certain circumstances that are out of your control. Like, sometimes in the middle of a deal, you may lose your job, and that's just an
Yeah.
unforeseen thing. Or
For
maybe
sure.
you get that promotion, or maybe just talk to them about it and see,
Yeah.
what the best thing is for you. Because that's what we're trying to do, is make sure we
Yeah.
give them the best
For
information.
sure. Well, and if you do get a promotion and you are making money, as long as it's for the same job and
Hmm.
stuff, that can be something that is good, right?
Absolutely.
And if you're paying cash on things, that's okay as well.
Hmm.
And obviously, the more cash you spend on things you might not be able to bring to closing, which
Hmm.
can be a bad ordeal. And so, even if maybe I also, yeah. So if you're doing a deal and you're trying to buy a house and you have saved up this cash, but then maybe your lender or how the deal worked out maybe said, hey, you actually don't need to bring any cash to the table. I definitely wouldn't go spend just in case if it fell through
Right.
or if something changed, because
Mhm.
things can change pretty quick.
Oh,
And you
yeah.
definitely, basically, try and keep as much cash as you can and don't open any new lines of credit.
Yeah, that's the biggest thing.
And
Don't open
then,
anything new.
yeah. And then the other thing is, though, like we were talking about, don't pay off any credit, because people might be thinking, well, I have this $300 month car payment.
Mhm.
I'm adding on a $2,000 mortgage. $300 would really free up my monthly spending for groceries and bills and utilities and whatnot. And so in their eyes, they're like, oh, if I hurry and get this paid off, and then I pay off my car loan and I can save that $300, that's great. But what
Mhm.
they're not realizing is that when you pay off a loan, especially early, it'll tank or not tank, it will lower your credit score in most cases.
Right.
And that can, first of all, you'll have to most likely requalify. And if you can't requalify again, that could taint or destroy your deal.
Mhm.
And you could end up not getting the home just because you're trying to do something good for yourself and what you thought was good for your deal. But and then the other thing is too is not only can it lower your credit score, but then when the lenders go to pull your credit history, you will no longer
Mhm.
have that loan, which was doing a really good job at, let's say you have that car loan for 2 years where
Mhm.
you never missed a payment and it was had a great history. When credit lenders are going to go look at that for your mortgage, when you go to buy a home, they're going to see that loan and it's actually going to be doing good things
Mhm.
because it's showing the lenders that, yeah, you can make a $300 a month payment for 2 years
Mhm.
or 3 years, whatever I said. But yeah. And so basically, like we're saying, just don't touch anything
Yeah.
at all.
Well, that's part of our job as realtors, right? We want to make sure our clients are ready, and that goes for
Yeah.
buyers and sellers. And I'm going to say this: don't list with me, don't buy with me unless you're ready, willing, and able to do it. You got to be ready, willing,
Hmm.
and able. That's one of the biggest things I've learned so far in this realtor journey.
For sure.
It's just making sure our clients are ready, willing, and able. Ready
Hmm.
means like, hey, if you have that car payment, maybe it's not the best time to buy right now. Maybe
Hmm.
pay that off and then get pre-approved, right?
Yep.
Maybe like, hey, I got these other loans going on. I got this credit card I want to be paying off. Are you willing to wait to pay those off to get your home, right? If
Hmm.
you're willing to buy that home, right? Got to be ready, willing, and able. That's like the biggest three things I've learned.
Yeah, no, that's definitely great. And another little side options too on your car payment,
Mm-hmm.
because people are like, well, this $500 car payment plus the $2,000 mortgage is really going to kill me.
Mm-hmm.
An option, which is great, is save up your down the money to pay off that car payment.
Okay.
Okay, so let's say you owe $6,000 and
Okay.
you want to buy a house in the next 2 years,
Mm-hmm.
but you're like, well, I just learned that this credit thing is going to help me, right?
Mm-hmm.
And so what you can do, save up that $6,000 to pay off the car,
Sure.
put it in a separate savings account, and forget about it,
Mm-hmm.
and then pay your monthly payments, and then go get your mortgage. And then the day you get the mortgage and the keys to your house, take that $6,000 out of that savings account that you forgot about and
Mm-hmm.
go pay the car off.
Go
And
pay that if you
then,
want to. Yeah.
yeah, and then your credit is going to go way, way down
Mm-hmm.
because you just got your mortgage and you just paid off your car. But that's okay because
Mm-hmm.
you've got a paid off car now and you've got a house, and which
Mm-hmm.
is the two things you wanted, as long as you're not planning on getting another new line of credit right after buying a
Mm-hmm.
house. But chances are you won't be anyways, because the credit pull from a mortgage is usually very significant,
Mm-hmm.
that most people, and they spend all their money buying their first house. They usually kind of take a break on stuff for a while.
Mm-hmm.
But like that's another thing to think about, is just because you have the $500, because if you don't want to do your $500 car payment
Sure.
and the $2,000 mortgage, but then you're like, oh well, I have to wait till I get my car paid off, then
Mm-hmm.
no, you can save up, and just set that money aside different for your mortgage. But yeah, if you're not, that's just another option to be willing and able, like you're
Right.
talking about.
Yeah, ready, willing, and able. And don't let your credit or like, your payment be a hindrance or like a detriment to buying a home or selling your home, right?
Yeah, for
Like there's
sure.
some situations, yeah, you need to sell or buy your home, just to help your credit. I'm dealing
Mhm.
with a situation right now like that currently. However, like, you know, the market is always shifting and changing.
Yeah,
So,
for sure.
if you're wanting to buy, if you're ready to buy, like don't let that credit score be a hindrance to you. Talk
Yeah.
to your lender, of course, talk to your realtor, of course, because there's programs for people with lower credit scores to get into homes.
Yeah. There's especially nowadays, I've come to notice that the lenders are getting so creative on things on
Mhm.
how to get people into the homes. Let's
Mhm.
say you're worked, I don't know, maybe you're a 1099 and you don't really have the monthly pay stubs,
Mhm.
but you do have um, whatever the year end tax returns, right?
Right, right.
There's new loans nowadays where you don't have to show any pay stubs and you can just show your
Your year-end tax return. Yeah.
yep,
Mhm.
and you can show them what you made for the year. It's
Mhm.
usually like a year or two that you have to prove, and then it completely overrides all these other things. And so if you have an underlying issue that you think is keeping you from buying and selling a house, I would definitely just go talk to a lender and see
Mhm.
what programs are out there that can override your underlying issue
Mhm.
and get you into a house, because maybe you are ready, but there's just this one little thing that you think is holding you down. But in reality, there's programs out there and loans that can definitely fix what's going on. So,
Absolutely 100%.
and then even then, let's just say you go to your lender and they say, yeah, there's not really a whole lot we can do for you. But when you do that, hopefully a good lender or realtor will, let's figure out a plan.
Mhm.
We're not ready and able to do it right now,
Mhm.
but let's get you a roadmap for in 2 years or a
Mhm.
year, or whatever we got to do, however long it takes. Let's get you that roadmap so that, you can hit
Right.
these savings
These
and
savings goals, these incentive goals to
the
get you.
credit goals and
Mhm.
all that good stuff so
Mhm.
that we can get you into that home. And so,
100%.
just because I think, especially with the young generation now, so many of them have been like, so they scroll through Instagram and TikTok and they're like, oh my gosh, I'm just never going to buy a home.
Mhm.
Whatever, I'm done. And so and they're just like, I'm just going to rent for the rest of my life. When really they don't know that there's a lot they can do. And
Mhm.
obviously, I'm not going to, it's hard. It is 100% hard, and it's harder than it has been.
Mhm.
And that is no doubt, no ins, buts about it. So many people like to argue about it. It's
That's the truth.
definitely harder now, right
Mhm.
now, anyways. And it
Absolutely.
might get better, it might get harder, but there's still 100% you can definitely go through and sit down with a lender or realtor, even if the realtor or lender knows that you're not ready to buy in a year or two. They're
Mhm.
still happily going to they're going to help you out, they can, and still happily take you down that road when you're in 2 years, when you are ready. I
Mhm.
think a lot of realtors and lenders would definitely be willing to help you get the roadmap going
Mhm.
and just get you started and tell you what you need to do and at least answer your questions so that you can get on the right path. And then, they might not see the deal come for 2 years, but I think a lot of people would be willing to wait for that. And
Mhm.
so if you if you're serious and you're like, I want to buy a house, I don't think I'm ready, but I want to buy a house, I would just call a realtor or call
Mhm.
a lender. And you might be surprised. You might actually be able to, and you might, be ready.
Exactly.
If not, they might be able to figure out something right then and there, a different loan program to make you ready and whatnot, or
Ex-
willing and whatnot.
Exactly, exactly. It's almost like if a lot of our clients will watch sports. It's almost like developing a game plan if you're not ready. And like you
Hmm.
said, some situations you find out, oh, I am ready actually. I can do this. But if
Yeah,
you're not ready, if you don't meet that criteria, if you don't meet that minimum credit score, you want to develop a game plan for your clients. That
for
way you're
sure.
prepared. Like you think LeBron James or Steph Curry goes into a game without knowing their opponent. It's kind of the same
Exactly.
thing. Like you want to know your market. You want to know what
Hmm.
you can afford, what you can't afford, what you can do, what you can't do, right? You got to develop a game plan. Make sure, hey, if I want to buy this certain home, like and my credit needs to be this high,
Yeah.
you want to develop a game plan to get your credit that high. Does that
Yeah,
make
for
sense?
sure. No,
Mm-hmm.
that's perfect. It's like And that's, there's the savings goals too for down payment, which is a big one.
Mm-hmm.
And then there would be how much you make is going to be a big one, and then your
Absolutely.
credit score. And so if you're stuck at a job and you're only getting paid $15 an hour and that's what's holding you down, maybe the plan needs to be, let's find you a new job. And
Mm-hmm.
and obviously your realtor and lender can't help you a ton there,
Mm-hmm.
but they can identify that issue and to say, hey, this is what is holding you down. You have a
Mm-hmm.
750 credit score and it's
Mm-hmm.
great. And you have the $10,000 or whatever you need to put down in
Mm-hmm.
cash. But for our lenders, they're looking at how much you're making and they know that you're going to get worn out on the mortgage because you just don't make enough,
Mm-hmm.
right? Or for instance, your credit score is what's holding you down. If you have a super low credit score and the lenders can't approve you, there's a lot that you can do in a year or two to get that back up,
100%.
remove that weight, and then you can. But it's really hard for a lot of people too because this isn't, most people don't, they're not professionals in getting a
Mm-hmm.
mortgage, right? No one is except for lenders.
Yeah.
And so it's hard for a lot of people to identify what their issue is,
Right.
and for lenders it's easy because it's their job, it's what they do for a living. And so even if you can't or you don't think you can, it's definitely willing to go and they can identify exactly what you need to get you there, right?
Mm-hmm.
And so definitely just take the first step, if you're, even if you're young and you're like, I want to buy a home, even if it's in 5 years or whatever, I would 100% just call a lender and be like, hey, can I have 30 minutes of your time and I can tell you what my financial situation is? And they can be like, all right, if you want to buy a home in 5 years, these are the things you need, and these is what you need to work on, and this is what you already have.
100%. And that's like one of our biggest goals as realtors is seeing our clients achieve their dream, whether it
Hmm.
be a first time home or an investment property. And maybe this is the 10th home they've bought, right?
Yeah, for
Like we're
sure.
we're trying to guide them to their dream. And maybe there's gonna be some road bumps, but
Yeah.
that's okay.
Yeah.
Like we're just developing them and we're going to be a part of their story. And that I think is a huge satisfaction. And I mean, you would probably know that too as well. Just that's a big part of
Yeah.
why we do what we do.
For sure. No, and I definitely agree. And I think that most people are just so scared of taking the first step. And I think that it's necessary. And I think that a lot of people don't realize with proper planning and identifying the goals that they actually want to have in life that they
Hmm.
can make what they want.
Absolutely.
And so, but yeah, I'd go with that. So